Hello, everybody. Good afternoon and welcome back. I hope you enjoyed the networking break and that you managed to make some good connections. So I'm very, very pleased to introduce you to your next speaker. We have Stuart Fenner, the Head of Energy Trading Services from EDF, who are our platinum sponsor for the event. And he'll be giving you a presentation all around trading, optimization and investment and strategies in order to maximize revenues and protect your investment. So without further ado, I'll hand over to Stuart, who will give us his thoughts on the topic.
Thank you, Lucy. So I'm intending to cover 4 subjects in this presentation. So a look at the energy system and some thinking around that, look at ancillary markets, the wholesale markets and BM, and then to focus a bit more onto the different trading strategies that are available to these assets. So if we start at the energy system, there's a lot going on. There's been lots of change, and the system's moved away from a system where there's been centralized generation that's reflected in the top left of this picture in orange, that was really supplying electricity on a one-way flow down to 2 primary markets of both residential and business customers. But as most of us will be aware, there's been lots of activity on the top right-hand side of this chart, where there's been an increasingly rollout of distributed assets, mainly wind and solar. And in both the big generation side of the market, as well as the more distributed side of the market, we're increasingly seeing battery storage being rolled out and connected into that energy system. We also see 3 other trends in the energy system that are worthwhile to just mention whilst we look at the slide. So in the top left-hand side, we're seeing an increase in uptake in electric vehicles, and that's both within the residential setting, but also within the fleet setting. And that gives some opportunities around storage and flexibility. Towards the bottom right of the slide, we're also seeing, albeit a bit slower than electric vehicles, activity around heat, and certainly decarbonising heat and moving more to an electric nature of heat as opposed to gas. And again, we see that presents opportunities for storage and flexibility. And on the bottom left-hand side of the slide, we're also seeing lots of activity around energy management, where we're seeing both residential and business customers getting more and more interested in how they use energy and how they can optimize their energy usage to both reduce costs, but for those consumers to also reduce their carbon footprints. So at EDF, we very much see it as a very exciting marketplace. And we think it's essential that when we are designing trading strategies...
Sorry, Stuart, sorry to interrupt. We're getting a few comments that the slides are frozen or not moving on.
So I'm probably still on the first slide. So can you see the energy system?
The energy system, yeah, that's the right one. Sorry, just got a few comments.
Yeah, no worries at all, but I'll move on very, very shortly. But the main message here is to make sure that we understand both the costs and the income of how the economics of this energy system is going to work going forward. And indeed, we think there's lots of opportunities that as the energy system becomes more connected to support the move to flexibility and storage. Hopefully you can see my next slide. And the next slide is one that's probably familiar to lots of people on this call. And this is where the energy mix, the generation mix, is going to change. And it's very clear that the demand for electricity is also going to increase, driven by a lot of what we just talked around on the previous slide. And the real challenge for the industry is how do you bring these new forms of energy, predominantly wind and solar, onto the system. It presents a whole new raft of challenges about how you integrate them and manage them. And obviously it creates problems and issues for the grid operator to ensure that they are able to meet the demand from the customers. A slide that perhaps isn't so closely looked at, which we do at EDF, is we look at the customer demand in quite a lot of detail. As you're probably aware, we have a generation business and a retail business. And this year has really started to drive home some of the thinking we need to do around how demand can fluctuate. So on this chart on the far left, you can see some of the impacts on COVID. So the first lockdown, where we saw demand collapse by about 25 to 30%. It was then suppressed, but as we came out of lockdown, It was still below what would classify as seasonal normal, but again, we've seen demand be away from its seasonal normal pattern, and that impact of demand obviously creates issues for grid and also creates issues within the wholesale market, particularly around managing demand and some of the price signals. But there's a lot to learn from last year on the impact of COVID, and what we also need to be considering as part of the wider energy system is the netting off of demand against the different markets that take the electricity from the system. What we believe is really clear is that there is a need for energy storage, and there are many, many different scenarios of what the transition might look like over time. And we certainly do recognise within the 2035 area that we could be expecting 12 to 25 gigawatts worth of storage being required by the system, and that's a mix of storage types. And again, at EDF, we're just looking through the different technologies. But what we are very clear on is the market that here and now is for lithium-ion battery. From our various conversations we have with counterparties, we can see that there's broadly about a gig of battery assets, big in front of meter assets that are on the system. And we think in the very short term, that could be 2 gigs. And certainly in our own business planning, we're expecting that by 2025, we think it's very likely that it will be up to about 5 gigawatts of large batteries on the system. So the market's changing, but we definitely are very clear that there's a need for storage. And we're delighted to see the activity that's going on in the market, where the asset owners and investors are putting money into these assets and deploying the assets onto the system. Looking at the first form of income, so the ancillary services market, what this chart looks to set out to do on just one slide is the dotted lines reflect the system or the requirements from National Grid. The bars reflect the product that's been purchased or sometimes not purchased, where the bidding hasn't been at the right price. And the dots on the chart reflect the various prices that are available to assets that want to participate in ancillary services. And there's a couple of points really to note. That one, it's quite a buoyant market. There's lots of transactions going on. This chart is from 2020 and it goes out to 2021. And also you can see there's a range of prices. And those prices are really selected by asset owners depending on how much price certainty that they might want. Obviously, there are some advantages to a monthly FFR product, or indeed, if they're prepared to operate on a more short-term basis, then something like the DC product would be more suitable. What this has done is really started to set a bit of a new benchmark at the moment on what money can be made from ancillary services. And you can see, if you take February as an example, you can see DC around about £17. You can see the monthly and weekly prices been about 11 or 9. But what you start to do is consider that if you can lock in the DC prices, which has its own set of requirements in order to deliver that service to National Grid, you can start to get some very favourable income from the ancillaries market. And in fact, if you can put it back to pounds per day for a 50 megawatt project, you're talking about the difference between £11,000 a day gross income to £20,000 a day gross income. And if you can get lots of those £20,000 days across the course of the year, you can potentially put £7 to £7.5 million worth of gross revenues into your battery project. So the market's very buoyant and the pricing is quite favourable. Grid have signalled that they have a requirement for ancillary services. So we think it's definitely an important market for an asset owner and optimizer to participate in. But we also need to reflect that the pricing is set by auction, and that as we see more assets coming into this market, there might be a risk that some of the prices that are currently available in the market, that the £17, might get suppressed as we trade across this year and into next year as the new assets come in. We also know that there's exciting activity around the stacking. opportunities around ancillaries and BM, and we know there's more national grid products that are coming into play over the next few months and into next year, moderation and regulation, and again they should form good forms of income for battery asset owners and those that optimize the assets on their behalf. We'd also suggest that you don't ignore CM, although it's a reasonably small amount of money. It is something that gives a nice base load income into a project over the long term. And we'd also advise people to keep a watch out for what's happening in the DSO space. And that as those price signals become a lot clearer, that there could be some optionality to deploy your assets into local markets in order to complement some of the money that's available within the ancillary market. If I touch on wholesale, again, wholesale, a very established market. A number of the rules were set some 20 years ago. And at its very simplest, it's split into a day-ahead market, within-day cash-out market, and a balancing market. And there's different rules that apply depending on which market you're playing in. But at its simplest, this market does allow for arbitrage. It does allow the asset to be for day ahead and within day cash out, taken out of the ancillary scheme and actively traded in the market. And those markets, as you can see from the charts, have different shapes of prices and different range of prices, therefore have different earning opportunities. And as I think we're all quite familiar in the balancing market, there are opportunities to support grid and to step in and help them balance the system, as long as you agree a bid and offer price with the grid operator. So at EDF, we're saying this is really an important market to consider within trade and strategy. Ancillaries is important, but we also believe wholesale and BM is an important factor. And one of the things we work quite deeply with the asset owners is discussing some of the charts across the bottom of the slide that really starts to articulate how hard you have to work the battery in order to succeed in those particular markets. As you can see in day ahead, it might be lighter touch in terms of the amount of cycles, whereas within day cash out, you probably have to work the asset that bit harder. And this really starts to play out the trade-off between short-term earnings versus prolonging the life of the battery, and indeed setting it in line with the warranties that might have been set by the battery manufacturer. And one of the key items here is to make sure that we set sensible minimum discharge limits with the customer to ensure that we are looking to get to the optimal outcome for earnings. On that subject, one of the tools that we use within EDF is the idea of POP, which stands for percentage of perfect. So certainly for the wholesale market, what we look to do is day after delivery, that the quants guys will sit down, run the analysis on perfect information, and will inform the traders, this is what you should have done. And what we will look to do is to then sit with the traders to understand whether their actions could have been improved, or indeed we feed that into the performance management process that we'll have with customers. And indeed it goes into the algorithm to make sure that we're always continuously learning based on a certain amount of market factors and situations, what the perfect outcome could have been. And indeed, a number of our clients are looking for us to discuss that with them so they can start to see an improvement over time of how we learn to operate batteries, which are a good fit for wholesale, into this particular mechanism. We're also finding that a number of our clients are looking to favour longer term batteries. So we're seeing a number of the batteries that are being purchased and put onto the system are moving away from 1 hour to 2 hour type duration. This probably signals that a lot of the investors believe that the wholesale market will become an important form of income over the project life of the battery. And the chart on the right hand side just illustrates some of the analysis that we'll do for the customers to explain what the potential financial upside is by having that battery at a 2 hour duration, and then the asset owner can then go away and decide whether or not it's worth spending the additional capex in order to trade the battery up to a 2 hour duration. But the main message is we definitely see that the wholesale market and the BM market is important to have within a trading strategy of a battery asset. One of the questions we sometimes get asked is, well, what's changed? And, you know, for us, perhaps what's changed since the last summit? And the reality is things have become a bit more complex, and it's become a bit more dynamic in the way that we have to make decisions. And I'll try and illustrate this on the next couple of slides. So if we go back to 2019, the world was reasonably straightforward, where there was a choice between a monthly FFR contract for a battery, or doing some wholesale trading or NIV chasing, or putting the asset into the BM. And the decision making was reasonably binary. You kind of did one thing or the other. If you look what happened in 2020, there then was a new market, a new product, a new service implemented by the ESO of weekly FFR. And what that started to do is to bring in more price decision points, or more asset optimization considerations. That do you want to get the long-term certainty of monthly FFR, perhaps go for some shorter dated weekly FFR, or indeed operate your asset within the wholesale or BM markets. But that was something that we were able to discuss with clients and suggest sensible trading strategies. If you look at where we're kind of at today, and it's great news that these innovations are happening. We have a new DC product that obviously needs management in a slightly different way, both in terms in the decisions you make of how you access that product from grid, but also on how you need to have your asset ready to deliver those services. And then you come into stacking. So things have become a little bit more complex, but the good news is that people are beginning to implement the trading strategies and have the right assets in place in order to really prove those very early business models. And then if we look forward to 2022, the situation becomes even more exciting, or perhaps even more complex, where we start to layer in additional national grid services, and at the same time having to make real-time decisions on how best to deploy either all the assets or even a part of the assets into the various markets. So what we look to do is try and work with our customers to explain some of the fundamentals, try and put it into language that everyone can understand, and then we agree the right way to execute the strategy in order to hit the customer's requirements for the return on their investment. We often get asked, well, what's the number? What can I put in the business case? And sometimes we get told we're too high, sometimes we get told we're too low. But what I wanted to do here was just to share that when we start to engage clients at the early phases of discussions, we generally present just four reasonably simple trading strategies, which might be a mix of wholesale and ancillary. It could be ancillary only, it could be balancing market only, or it could be wholesale only. And these are really just our starting conversation trading strategies. And what we tend to do is offer up a few of what we think you get prior to volatility. And then if there's some volatility or certain things play out, where the higher end of the range will be. So you can start to see, and again, it's kind of backed up from independent analysts, that you can look for a range between 40 and 80 with no volatility. But if you come back to perhaps the average of 60, add on some volatility, then I pretty much think that the £80 number is something that is achievable across the life of the asset. What I can't really say is precisely how that £80 will materialise, but the key is, as per the earlier slide, is to make sure that you've got access to the right markets, the software, the systems and the people in order to pivot away from one particular strategy, update it very quickly, and then go off into a different direction. If I were to summarise my kind of key thoughts, so that the first one right at the start of the presentation was know the energy system. It's going to change. There's going to be opportunities. There might be some threats as other forms of flexibility and storage come into that system. But knowing how the costs are going to change and also how the income might change is absolutely key to making sure that the adopted trading strategy will hit the required IR of the asset owner. The ancillary market is evolving at pace, and we're really, really pleased to see that, and the open nature of participation in trials. So we think that is an important form of income. It's not easy for us to predict exactly what the number is going to be over a long period of time, but we know it's an important form of income, and structurally the market requires these kind of supports and services. Batteries are a great fit with the wholesale market. The ability to charge, store and discharge very quickly at different time zones is a real benefit. And we think that as we can understand how the batteries start to operate within the stack of options of flexibility, it will be a lot clearer over the kind of earning opportunities within that part of the market. I think decision making will become a bit complex. I think our role as EDF is trying to understand that, work through it, and present options that we can discuss with our clients, because we do believe there's an element of co-creation of the trading strategy for the assets. And we've noticed there's more of an interplay. So there's lots more dynamic decision making on a daily basis than perhaps there was even 2 years ago when we were looking to put the early generation of batteries into the market. And we definitely view that partnership is key to success. We believe in the open collaboration. We believe that only by acting as a group of working as asset optimizers and owners that we're going to achieve what really we're looking to achieve, which is to make sure that we can decarbonize the energy system and have things like battery storage that make good returns for the investors, but also help with a bigger picture, which is making sure we hit those net zero targets in a few years' time. Lucy, that's it.
Great, thank you, Stuart. Sorry, I was just unmuting myself. Thank you so much for your presentation, for your slides. I do believe they'll be available to share, will they, with the audience
Yep.
members? Great, along with the recording. So I'd just like to encourage any audience members who do have any questions. We've got a couple of minutes left for Stuart to answer some questions. In the meantime, whilst everybody's thinking about their questions, I have a couple. So I just wanted to ask something around floor prices. Sorry. So what are the benefits of these in kind of a nutshell?
So I think in a nutshell, it allows the asset developer and the asset owner, when they're looking to attract finance into their project, to be able to reference to a guaranteed flow of income for a period of time within their project. So what that allows the asset developers and owners to do is to say, well, I've managed some of my downside risk. It's not going to be all the downside risk, but I've taken a chunk of that and I've transferred that to another party, which in our case is EDF. So what we look to do is a lot of our floor prices we actually based on backing our ability to manage the asset in the wholesale market. And that really sets the kind of the benchmark for us on how we calculate the floors. And they have been popular with a number of counterparties, because again, as this market starts to develop, it helps to know that someone's prepared to stand behind some of the revenue that's required in the project.
Okay, got it. Thank you so much for clarifying. We have a couple of questions now. So I've got one from Nick Johnson, just in terms of, Nick wants to know, how is the commercial picture for storage deals from investors and developers changing with the new markets?
I think yeah, one of the main drivers I think was mentioned a bit earlier today is to make sure you're finding the right project that's in the right location, because I think they are being quite contested in the market. Second one is making sure that you're buying the right type of battery, or at least you have the space to expand the battery if you need to do so. And I think people are also looking for innovation. So lots of our customers are saying, we love the idea you can do kind of long-term floor prices for us, but we need to make sure that you keep innovating, because we don't want to be left behind, because it's become quite a competitive market of late with the different league tables, that we welcome the competition and the transparency of activity. So I think the commercial model, it's making sure the right project, buying the assets at the right price, and choosing a partner that can help your project get up and running and also can support you through, which are quite long-term investments.
Right, yeah, I would definitely say in a saturated competitive market, innovation is certainly key. So we've got another question around your auto bidder service. So what is the benefit of a trading service when you've got auto bidder?
I suppose it depends on the mix of AI versus the people. So if you look what we're able to offer at EDF, we've invested lots of money in software and IT systems and all the various tools. We've got lots of quants people that perhaps will bring a different view of the market to what the algorithm might say. And we also have a 24/7 shift desk where we've got guys that are dispatching assets that might get some kind of insight from some information flow that might just make that marginal kind of difference. But I think the reality is that unless you're very, very lucky and you've got your asset available at a point of quite an unplanned event and you make lots of money, I think it's incremental change. And I think where the market has changed in the last year or so is where it was probably a pure AI play, just put things in auto bid, let the computer do the work. I think there's an acceptance that this is actually a bit of a people layer as well, and they're the ones that might better spot the opportunities.
Yeah, so would you agree that, you know, in terms of automation versus human kind of interaction, would you, if you could, you know, had to kind of put a percentage on the split for the future, would you be able to kind of...
Look, the reality is, let's say an 80-20 split, because as I just described, that the amount of data and price information and decisions you need to make now in this new world of stacking of opportunities and a new good product, you need good IT, and also not just to do the optimization calculation, but then to actually send the signals to the site to get the asset to operate in line with the requirements of the scheme. So you have to have good IT systems and have quite an agile approach to how you develop those. But I'm also a strong believer that this is an element of relationship here, of trust. And, you know, people generally come to speak to us because we've got access to lots of resources within EDF that we let people have access to.
Definitely, yeah, that's great. I mean, obviously it goes back to the point where, you know, partnership is key to success and human, I guess, interaction and relationships. So we have a couple more questions. One is around, so how do you perceive the benefits of a portfolio of assets versus individual? Is there extra value or lower risk on offer, and how does that work from the perspective of an optimizer?
I suppose it depends on whether you mean a broad range of battery assets, or you think you've got assets like wind that can go into the balancing market. You might have gas plant that can go into balancing or can respond to price signals quite quickly. I think we're still trying to actually quantify the benefit of having these kind of new assets in the portfolio, because they haven't been around for a period of time. And we're also just trying to figure out the kind of the offsets of the different technologies in order to kind of manage system demand and also price. So we think there are some benefits. I don't have a number here today, but we also do see a market that where you have suppliers such as EDF, but they've got a big retail book and also a generation book, that there might be some services that they might want to buy directly as perhaps a new way. And we also know that some of the activity in the DSOs, where they're looking to perhaps buy local services to avoid reinforcement, creates different income streams. So there's an element of having an asset in the right place at the right time. But at the moment, I don't have a firm answer on exactly the pounds note benefit. But I think what Grid is looking for, and what I think we need, is a mix of technologies that can respond either very quickly or over longer periods of time.
Yeah, definitely, and a kind of the mix of technologies that's needed is something we'll be touching on tomorrow morning on one of our panel discussions. I think that's definitely a very key point. Finally, last question: do you have any strategies for complementary technology beyond battery storage?
So they're definitely in development. So we've got an R&D team, and an R&D team look at a whole range of different technologies. As you're aware, we do lots in hydro anyway, so we're actually one of the kind of global leaders in that market, and we're looking at things like flow batteries, we're looking at things like air storage, and obviously hydrogen. So they're very much in the incubator at the moment and in the R&D setting. But again, I'd encourage anyone, that they want to have a conversation with us, that you've got our details, that please reach out and we can get into a bit more detail on that.
Yeah, definitely. Yeah, so EDF have a booth in the virtual exhibition hall, so you can reach out to them, or you can use the platform to set up one-on-one meetings. So that brings us to the end of the presentation. Thank you so much, Stuart. I think it was really great, really informative. And yeah, as we said, any other questions, feel free to direct them towards the EDF team.
Perfect. Thank you.
Great. All right, thank you, everybody. Next up, we have, it's not a live presentation coming up next, but we have a pre-recorded presentation starting in 15 minutes. So if anyone would like to watch Huawei's presentation, then please do join, and we'll see you back here shortly. Thank you. Cheers, Stuart.
Bye.